here to discuss the staples struggle and tell us which ones are best positioned for a potential downturn or maybe no potential downturn is Nick Modi, an RBC capital markets analyst. Nick, let's tackle the obvious one first. If you look at the stocks I mentioned there, Campbell's, General Mills, and what was the other one? Kellogg, all down. Do you attribute that to the fact that the likelihood of a recession seems to be fading, or is there something unique about these companies that is causing them to come down?
I think there are a few things going on here, Tyler. First, I do think, obviously, the macro is having an impact that tends to impact the consumer staple sector quite a bit, given it's more defensive. And so when people feel better about what's happening in the go-forward economy, the sector tends to underperform. Well, let's not forget that this sector had incredible performance. I mean, I think 1,800 basis points of outperformance in 2022. When we walked into the year, they were trading at almost all-time relative highs versus the market. So our call coming into the year was, listen, that can't sustain itself. We saw a lot of pricing go into the marketplace, but at some point it's going to start affecting the consumer. And that's kind of what we're seeing right now. And so I think not only do we have the macro dynamic, but I do think you're starting to see volumes kind of lag expectations as we start to lap some of the big price increases we took a year ago. And I think we're going to start seeing more of that weakness over the coming months and quarters.
How bad could it get, Nick? Because I'm persuaded by what Nancy Lazar over at Piper Sandler is arguing, that after we've seen these massive price hikes go through, there's no reason to think deflation should be off the table. You know, just because we all think, oh, Campbell's has never cut prices doesn't mean they might not be forced to this time.
Correct. I mean, I think we should all be bracing for a promotional kind of environment that is maybe greater than what the managements have guided to. So that's number one. The second point, and this is more of a packaged food comment, we're seeing a lot of shifting of consumption from the center of the store, where pricing still remains very sticky, to the perimeter of the store, where you're seeing disinflation and deflation happen at a much greater rate. So consumers are starting to identify that there's value in, hey, look at the price of eggs and what has happened the last several months. And so they're making some choices, like for the breakfast occasion, maybe instead of buying cereal, they're buying fresh fruit or yogurt or eggs. And so that is something that we're seeing right now.
In your coverage universe, Nick, what is your favorite stock right now, and which one is the one that you would advise our viewers to sort of stay away from?
Yeah, so our top idea for the whole year is Constellation Brands. It continues to be our top idea. They have a lot of momentum with their brands, Mondelez Especial and Corona, and certainly some of these Bud Light dynamics that we've been seeing is coughing up a little bit of extra volume to Constellation. So I still like that story.
That sounds like, you know, Nick, if I might interrupt, that sounds like a really good stock for a recession and a really good stock for good times. I mean, why not? I mean, it works both ways, doesn't it?
Hey, sometimes you can have your cake and eat it too. And in the case of Constellation, that's exactly what you're getting. And Tyler, in terms of names that we're still very cautious on, look, we're cautious on Kimberly-Clark because of the private label exposure. We're cautious on the packaged food names for the dynamics we discussed earlier. But I have to acknowledge these stocks have really performed badly to your earlier comments starting off this segment. And so you got to be careful. Don't get too greedy on the downside. I think right now what you have to find is relative outperformance. And so we tend to prefer beverages over packaged food at this point.
And finally, Nick, what would you say to those? You know, just last hour we were talking to Chris Senek at Wolfe Research, who said, well, but okay, maybe there's a Mondelez. Valuations are lower than they've been historically. What would you say about that?
Well, Mondelez is actually one of the very few names across packaged food that's trading above where it had been in 2022. So Mondelez is seeing some very good results. And look, they have a portfolio that tends to be a lot more kind of sticky, right? When you think about snacking and chocolate and confection. And they have some global exposure too, where economies are doing well, especially in the emerging markets, because of all the inflation that we're seeing. So look, whether we walk into a recession or not, I don't know. All I can tell you is the consumer is definitely behaving like there's some challenges coming down the pike. And that's why we're seeing a lot of trade down right now in the market.
Very interesting. A warning, perhaps on multiple levels. Nick, thanks for joining us today. We appreciate it.
Thank you.
Nick Modi.